The Lal Street sees broad-based buying to end higher for the second straight day. The Nifty reclaims the 20,100 mark. Mid-caps outperform. The index surges 2%.
Auto stocks cheer amidst select stocks reporting their third quarter numbers. Maruti in the green after reporting an inline set of numbers. TVS Motor surges a second day running after strong performance. Bajaj Auto soars after it beats estimates in Q3.
JSW Energy and Bosch slide over disappointing third quarter numbers. While CG Power cheers to good quarter three, the management is bullish on the opportunities in India as well as overseas.
Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you all of the key data points that transpired in trade today and, of course, gear you up for tomorrow. I'm Surabhi Upadhyay, and as always with me is my colleague Nigel D'Souza. Nigel, what a green day. You know, today I can't complain. I don't think there was anything to complain about from a bull's point of view.
Well, the bulls actually, it was getting to that point where they were forgetting how to party. Today they remembered yet again, you know, and it was the Nifty bulls that had a great party in today's trading session. They did very, very well. The Nifty Bank, that's the one that needs to lead the way, and it's taken on the mantle, both from yesterday as well as today. RBI has injected some liquidity into the system. The Nifty Bank, the financial stocks, they like it. And that's why we have seen a good 1,000-point rally in just two sessions. If we pull up a 20 DMA, we entered very, very close to that crucial technical mark as well. So the banks, they did well. But you'll be wondering, my portfolio felt so good today. How come? Because, in fact, if we look at the broader market stocks, that was where the big party was. You had the small cap index, the mid cap index, the breadth of the market. All of them looked very, very good. And you know, Surabhi, today, if you gave good news, it was appreciated. It was bought into. You had Syrma SGS that did well. Good numbers, good commentary. Ami Organics did very, very well in today's trading session. That stock as well was up and about. You had Deepak Fertilizers as well. So the short point was good news was taken note of and good news was digested as well. So an out and out good day. I think in the last few sessions, yes, there was froth in the market, but there were a few stocks that fell, not because of fundamentals, but because of trading action. The seller just wanted to get out. And today, in fact, we saw some of that get reversed. So the bulls will be counting on, you know, a bit of a pullback even from here.
Oh, yes, absolutely. Today, the stars was aligned in favor of the bulls. There was a global recovery, that whole gloom and doom, fear psychosis that was playing out on Wall Street, on US tech stocks, that was, settled. The few Asian markets that were trading today, they were on the higher side. European markets, while we were trading, were up and about. And by the way, the price of oil has cooled off significantly. Brent oil is now down to 76. So that's another positive cue that the market decided to take note of today. And once the buying started, perhaps, after that, it would be whatever shorts are remaining in the system, they would have had to run for cover. And that kind of propelled the market even higher. Well, all round, good recovery, good pullback in mid caps, small caps, and across sectors barring FMCG. That was today's action. Let's tell you what we've got lined up on the show today. We'll start off with the top movers and shakers. Hormaz will take us through the day's play. We have auto stocks like TVS Motors, Bajaj Auto riding higher on strong numbers. Earnings season, of course, is in full swing. So lots of names like Sirma soaring higher. Then you had the likes of JSW Energy. And this was the one stock which had a very negative reaction to Q3 numbers. We'll talk to you about it as well and why it fell off. But there were far more hits than misses on the earnings scorecard today. No two ways about that. Of course, then later on the show, we'll also get you the main events to watch tomorrow, as well as the big earnings to watch tomorrow. But first up, let's decode how the day has been. Hormaz is here. Hormaz, a green session finally.
We're heading into a big day in the green, and that is exactly what the bulls would have been hoping for. And a part of that started off last night itself with the recovery in the Nasdaq, and you can see how the IT stocks behaved in today's session after that recovery. Persistent Systems, the usual suspects, outperforming 7% higher, leading the pack today, along with the other names as well, gaining anywhere between 2.5% to 5%. But a lot of these beaten down names, which were in a sea of red over the last few days, finally saw some green today. NetWeb and Anantraj, both after the clarification that they gave over DeepSeek, both of them seeing a 10% upper circuit in today's session. NetWeb, after 8 days of losses, finally saw some green. Newgen Software also saw a rebound after the downgrade, the earnings, and a 10% circuit there as well. Credit Access Grameen continues to rebound, another 10.5% up today. And Keynes Technologies, after yesterday's drubbing, ending 6.5% higher in today's trading session. You mentioned good news getting rewarded. Syrma SGS 20% higher in today's session. Deepak Fertilizers, possibly the earnings of the afternoon, 14% higher in today's session. CG Power, KPIT Tech, of course, that the guidance raise boosting the stock 9.5%, and Adani Power just before closing came out with numbers, the stock ending 5% higher. Some other earnings reactions came in from the newsmakers as well. Piramal Pharma ending almost 10% higher today after results, as did CAMS with gains of nearly 7%. Maruti, of course, fell off the highs of the day, but mind you, the stock has run up quite a bit over the last 1 month, and hence that kind of a reaction. And Gujarat Fluoro with the management commentary on potential gas price increases in the future showing up in the price as well. And lastly, stocks that bucked the trend in today's session, most of them earnings reactions as well. We mentioned JSW Energy, Bosch was one of them, as was Ambuja, and some other names like Jupiter Wagons and Intellect Design ending in the red. Back to you guys.
Oh, okay. All right, Tormaz, got that. Thanks very much for the details there. So a good day with far more amount of green than what we've gotten used to. Let's bring in the experts now. We have Mayuresh Joshi of William O'Neill and Shrikant Chouhan of Kotak Securities with us. Gentlemen, hi and good afternoon. Shrikant, let me go to you first. Now, I know we're jumping with joy just because there's green finally. But where are we? I mean, this is still a market that's been bruised quite badly, right? And it's been very, very fragile. So in terms of levels, what to look at next and how do you rate this pullback?
Yeah, good evening, Surbhi and Nigel. See, like after a very long time, we are seeing divergence in mid-cap stocks as well as the overall performance of the market. There is like good amount of strength in mid-cap companies, and if we consider the mid-cap 50 index, then it has formed a bullish reversal formation. So after completing the correction, if there is a bullish reversal formation, that means that we can see some more upside in the near term. Market is like gradually moving up until the markets are not crossing 23,500. I think we are going to see gradual sort of activity. But broadly, I think the pain which was there in last 7 days was mainly into all these mid cap and small cap companies, and now they are like reversing from their lows. And the gains that just now Hormas has also like highlighted. One thing is very clear that we are going to see some more upside in the near term. So 23,500 should be on the higher side, and broadly, I think 23,000 should be the important support levels for next few days. So I think between these levels, we are going to see some consolidation. But on the dismissal of 23,500, we can see short covering in the market.
Yeah.
Okay, all right. Thanks a lot for that, Shrikant. We'll come back to you. But today, I'll tell you, there was one of our researchers had a very, very busy day, Sudarshan. Sudarshan, tell us about numbers that came in from the auto pack, tracking the two-wheeler names and then Maruti as well. So break it down for us.
So we'll start with Maruti. Maruti reported earnings, and earnings were absolutely in line with estimates, but stock has closed with a minor cut, and the reason is in the month of January, basically this year, stock has outperformed its peers. The stock of Maruti was up 10% in January so far, against down of 9% each for M&M and Hyundai. Now the question is, what all factors have worked for Maruti in Q3? First, raw material costs have stabilized in last few months. Second, realization has fallen. It was a minor fall, but it was in line with estimates. Second, discounts likely to have impacted margin negatively, because you would have heard the reports that in the last few months, discounts by all the players, whether it's in four-wheeler or two-wheelers, discounts have risen, and that likely to have impacted negatively. So talking about the numbers, EBITDA is increased by 14%. Margin continues to be the levels above 11.5%. It has come at 11.6%. Coming to TVS, earnings were strong, and con call commentary that company has given, it's very positive. What does company say? It says Q3 margin has come at 11.9%. Now, company expects margin can improve from this level as well. Now, what the company will focus on? First, premiumization, and second, product mix. One important comment that company has made is that any investment, if company looks to do in EV, it would be based on the consumer feedback and if there is an opportunity. Also, brokers are positive on TVS Motor. UBS has a buy call with a target of 3,100 per share. JP Morgan too has an overweight call, and target is 3130 per share. Last is Bajaj Auto. Earnings were led by margin. Margin has come in at about 20%. There was an expectation that this time margin may slip below 20%, but company has given a margin of 20.2%, above 20% for 6 straight quarter. And what all factors have worked for Bajaj Auto? First, demand remains healthy in 125cc plus segment, and also it continues to maintain the market share in the ICE segment despite the expansion that company has been taking in EV space. So EBITDA has increased by 20%, margin has come in at 20.2% versus 20.1%. What about the outlook given by Bajaj Auto? What did it say? In export segment, it continues to see the growth of 20% plus. Second, domestic motorcycle segment, if you remember, in H1 FY25, industry had seen a growth of 6%. But if you take off 9-month FY25, growth has moved in the range of 6 to 8%. Company says this range of growth for domestic motorcycle may continue going forward. Also, one segment that company continues to focus on is the higher end of bike, that is 125cc plus, and it says the growth in this segment will remain more than 100cc segment. So overall, it was a good diff by auto companies. Two-wheelers, very strong earnings, outlook is healthy, and Maruti will wait for the commentary.
Okay, all right. Thanks a lot for that, sir. Mayuresh, your take on these auto numbers?
So, Nigel, I think a good set of numbers. I think the street was going in with softer numbers, as Sudarshan mentioned. Maybe some element of inventory built up, issues seen on volumes, the discounting factor probably working out on price degrowth. But in a certain sense, I think the numbers which have come through in line with estimates as far as volumes are concerned, as far as pricing is concerned, and even if you probably assume the discounting aspect, along with input costs, which have probably gone a tad bit higher, I think numbers have been reasonably decent. TVS, I think, was the better set of numbers among all in the two-wheelers. Obviously, I think Bajaj had the margin expansion, as Sudarshan mentioned. But TVS's commentary also was equally solid. So I think the product mix that they're looking at, the expansion probably in North and West, as terms of more dealers and distributors getting added, their EV platforms doing well, and expectations of expanding their double-digit margins is a huge positive in terms of the EPS rating that the stock is probably reflecting. Maruti, again, I think, holding up very strongly. The expectation in terms of launches, specifically, I think the electrical platform that it is expected to launch over the next few months, and the hybrids as well, is going to be very, very interesting, because if the pricing is in a very, very sweet spot, I think they can garner a decent share with the sheer distribution network that they probably got, the after sales as well, and the service components, which become very, very reasonable to probably have in terms of your ownership of a vehicle itself. So yeah, I think the EPSRS ratings, I think Maruti and TVS probably look good. Anybody holding can definitely continue holding stocks.
Okay, all right, got it. Thanks for that, Mayuresh. Let's move on to another stock that was in focus today. Shares of Syrma SGS zoomed almost 20% after the company delivered what looked like a pretty strong set of earnings for the third quarter. Upasna, in fact, is here to tell us exactly what's worked for Syrma to get that 20% circuit going on the stock. Upasna?
Certainly, it was a strong beat, a strong set of numbers. The companies reported strong revenue growth, which was mainly led by companies' segments like auto, industrial and railways, which saw nearly 37 to 38% of a growth on a Y-on-Y basis. Now, coming to numbers first, revenue saw an uptick of 23%. EBITDA margins also expanded 320 basis points at 9.1%, and PATs saw a strong up move from 20 crores to as high as 53 crores. Now, management commentary in its conference call has remained quite upbeat, in which management has highlighted that it is on track to achieve its EBITDA margin guidance of 7% for FY25. Company has also onboarded significant clients in automotive and industrial segment, and it expects significant businesses from these segments next year onwards. Company's order book also stands strong at 5,300 crore, with 30% from autos and 37% contribution from industrial segment. Company has also guided that next quarter onwards, the net working capital days will come down to 60 days from 64 days currently, and it is aiming to bring down high volume consumer business contribution below 35% and increase the other segments. Mind you that the margin expansion was largely on the back of product mix change that has led to such a high margin improvement, is what the management has also highlighted. And lastly, company has said that it aims to increase high margin export business from 20% to 25% in the long term. So all in all, strong set of numbers and upbeat management commentary.
Okay, this was definitely a huge hit, 20% on Syrma SGS. Let's quickly, thanks for that, Upasana. Let's quickly run through two more important earnings reactions. JSW Energy was down almost 6% actually. After the Q3 numbers came out, there was a decline in the revenue and the net profit. But KPIT Tech was once again a very, very strong set of numbers, or strong at least relatively from the market's expectation standpoint. And the stock was up almost 9% after those earnings came in. The management here at KPIT Tech has reiterated their guidance. They're saying they'll maintain that guidance and achieve it for FY25. We have Vivek joining in with the details on these. Vivek.
Well, that's right. So JSW Energy, like we mentioned, the company has a significant portion of its capacity that is not tied up through long-term PPAs. So they sell it in the short-term market, or also known as the merchant sales market. Merchant sales prices were down 26% on a year-on-year basis. While there was not too much of an impact in terms of volumes, the lower prices is something that actually impacted their top line. So top line grew only, top line in fact degrew 5.5%. EBITDA was down 17.5%. Margins contracted on a year-on-year basis, and profitability was down over 32%. Now, what's the other factor that impacted weak merchant prices? And given the fact that the company started wind capacity operations in what is seasonally a weak quarter as far as the wind sector is concerned, that also impacted the earnings. So on the back of that, JSW Energy today saw significant selling pressure. Also remember, CRC recently disallowed a tariff as far as its battery energy storage was concerned. Company has appealed against this particular order at APTEL, and the next hearing is on 6th of February, which is a key point to watch out for. Now, coming to KPIT Tech, after peers' results, especially peers with exposure to the auto and automotive sector in Europe, market was anticipating a weak set of numbers. But the positive fact was that the management went ahead and reiterated its top-line growth guidance in the range of 18 to 22%, and in fact had the confidence to go ahead and upgrade the EBITDA margin guidance to 21% plus from the earlier 20.5%. This is something that the street took quite positively. The constant currency revenue growth of 2% versus the estimated 1 to 1.5% growth that the street was working with. EBITDA margin expanded on a sequential basis, and also when you're talking about the 9-month constant currency revenue growth came in at 20.7%, a healthy print, and this is something that the street liked.
Okay, all right. Thanks a lot for that, Vivek. Shrikant, I want to ask you about KPIT Technologies first. The stock has seen a sharp correction. These numbers look good, upgrading guidance and all, street likes it. ER&D, space, the street was nervous. Where does it find support?
Nigel, if we see the technical pattern of the stock, then since last almost 1 year, whenever the stock has fallen to the levels of 1300, we saw a good amount of buying interest in the stock, and eventually the stock has managed to come back to at least 1500, 1550 sort of levels. And today's recovery, along with good volumes and crossing past several days highest levels, clearly indicates that the stock has reversed, and we could see again the levels of 1500 or 1550. So in case if there is any correction because of any reason, then also it's a buy. But even at current level, it's a buy with a target of close to 1500.
Okay, all right, got it. Thank you very much for that, Shrikant, as well as Mayuresh. Good to have you on the show today. Thank you for all of your advice. With that, we have to take a very quick break, come back on the other side, and we'll get you the top corporate voices of the day along with the events to watch.
Well, let's take a quick look at all the top corporate voices that we had during the course of the day. First up, CGE Power. The stock fired up in trade after reporting a strong third quarter showing. The management said it's bullish about the opportunities in India as well as outside India. They added that the railway business is growing in the high double digits, and the management says that the market in industrial segment is not doing so well, but are still growing. It guides for the PBT margins to closer to around that 14 to 15%.
Second on the list is Acme Solar. The stock soared in trade over a strong third quarter performance. The management told CNBC-TV18 that in the next 2 quarters, the company will add 450 megawatts of capacity. The company is also saying that it's at a comfortable debt to EBITDA level. It is also expecting EBITDA to cross 4,000 crore rupees by FY28. Okay, let's now move to the key events and earnings to watch tomorrow. We have Abhishek here with the details.
Well, to begin with, in the US, tomorrow Fed interest rate decision will come out. It's expected to keep the rates at 4.5%. GDP growth rate quarter-on-quarter advances will come out estimated at 2.8% versus 3.1% that it was last time around. Initial jobless claims will also come out. It's estimated to be at 2,20,000 versus 2,23,000 that it was last time around. Core PCE prices quarter-on-quarter that will also come out estimated at 2.5% versus 2.2% previous time. With respect to stocks going ex-dividend in India tomorrow, Hudco interim dividend of rupees 2 will be adjusted to the stock price. Siemens rupees 12 and TCIL, that is Transport Corporation of India Limited, that will be about rupees 4.5 in terms of interim dividend. Earnings season, so key results tomorrow, we need to watch out for L&T, Bajaj Finserv, Bank of Baroda, Adani Enterprises, Adani Ports and SEZ, as well as Dr. Lal Pathlabs. And more earnings tomorrow, Jindal Steel and Power Limited, Raymond, Nesco, BL, Astral, as well as Shree Cement. Back to you.
Okay, all right, Abhishek, thanks a lot for that. And before we wrap up, let's talk about the Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to help you navigate the markets and make informed investment decisions. Today, we help traders understand the difference between high-frequency trading and algo trading.
Algorithmic trading and high-frequency trading, or HFT as we know it, they're often confused, but they're different. They use computer algorithms, both of them, to execute trades, but the key difference between the two is in speed and strategy. On the one hand, algorithmic trading uses algorithms to automatically execute trades based on set rules like price, there could be volume, time. It aims to trade efficiently to reduce human error and improve the accuracy of those trades. Now, this can involve various strategies such as order routing, market making, or even arbitrage. It's commonly used by institutional investors, hedge funds, and some individual traders as well. High-frequency trading, on the other hand, is a subset of algorithmic trading, focused on executing trades at incredibly fast speeds, sometimes making millions of trades in fractions of a second. The goal here is to capitalize on any tiny price movements that last just nanoseconds or microseconds. The main difference here is speed. Algorithmic trading can execute trades at various speeds, but HFT is all about speed, processing thousands of trades every day. HFT targets short-term gains by exploiting small price changes, whereas algorithmic trading may involve fewer, slightly longer-term trades. Is it suitable for retail investors? Well, for algorithmic trading, it is accessible by various platforms offering automated trading tools, making it useful for individual traders. However, HFT typically requires massive investments in technology and resources, making it out of reach for most retail traders. In short, HFT is a fast-paced subset of algorithmic trading, which encompasses both short and long-term strategies. In short, all HFT is algorithmic trading, but not all algorithmic trading are HFT.